And we are live. Welcome back, everybody. Dip Catcher Radio back again. We have a very special guest. This is the first time we've ever really had a guest on the YouTube channel. We have longtime Hexican, probably the first Hexican YouTuber, maybe other than Hexo. I don't know. It's all back there.
Yeah, we can talk
Movie
about that.
star as of late. Future Emmy award-winning actor.
Well, I don't know about that, but yeah, okay.
the one and only RG3. Welcome to the show.
Thanks, man. Good to be on here with like you brilliant guys. I mean, I knew that you guys were going to show up and was hoping and rooting for all of you, and here you are. So, man, my hat's off to you. Better Hexicans have come, and boy, am I glad.
Well, yeah, thank you for that. I feel like I'm trying to think back. I think the first time that you and I think we've only been on camera together once, and that was during the 24-hour YouTube stream going into Big Payday.
Oh shoot, man, that was
So I think I was on for like 30 minutes talking.
Was that when we were all wearing our top hats and stuff? And
yep, yeah, all that. Yeah. And well, simpler times. That's for sure.
Right. I mean, gosh, we just had one coin. We just had one product. It was just the beginning of the whole thing. And I mean, and the world was at our footstep, our doorstep at that point. It was like, I mean, what could possibly, come of this? And it was, gosh, so much has. It's incredible to think, where we've come from and where we are today. It's badass.
Yeah, and even at those levels, I remember it felt euphoric at the time. Like, and it's funny because it's like now prices are back to pretty close to, like, in terms of broad, combined EHEX and PX price, like pretty close to the levels it was at that time. So it's pretty wild how just time changes the perspective. And yeah, I mean, it's definitely grown a lot from, kind of one thing to now it's kind of like a whole ecosystem. And, it's been pretty crazy to watch and be alongside.
Which in perspective really, puts price in perspective, because there's so many things that this ecosystem has diluted itself into, and none of it, bad. I mean, of course, there's been a couple of projects here and there that have, sucked some value out without adding any value to the community. But all the new things that we have, all of the things at our disposal now, and the delusion of the value of the system into those projects. I mean, I'm really bullish on the fact that people think, oh, price down, oh, bear market, oh, we're not really getting the traction we should get, and pulse chain this, pulse chain that, and I think, no, guys, this is like foundation being laid. This is value being distributed. This is a solid foundation that for us to grow upon, and having a bull market looming ahead of us that is looming right now is really exciting for the foundation to be here, everything to be in place, DEXs, L1s, perpetuals, hex, all this laid out before us, 2 hexes, and the bull market coming. I mean, I'm excited about what's about to happen.
Yeah, it's definitely, it feels like a bear market, like no doubt about it. It's been now, I think, like 2 years. I mean, I think the all-time high was right around this time of 2021 on Hex. And so it's been basically a 2-year, downtrend, but it really only retraced what it took a year to get to. So it was like a year from, end of 2020 to end of 2021. And now it's been 2 years, and it's basically chugged back to where it was at the start of 2021. So it's been kind of like a elevator up, stairs down kind of,
market. Again, showing its strength, right? Showing Hex's strength and what it is possible. It's kind of like kinetic energy too. It's the drawing back of the bow and then the release of the bow, and the longer and slower that bear market is going down, it seems like it's just putting more and more energy. And and you see that in when they chart it, it's that what do they call that wedge that descends into just and then finds its base and stays there. or its resistance and stays there, that's ready to catapult. We've seen it so many times. We've seen it that take off from there so many times. And if you look at the chart from a macro level, if you look at the log chart and you back out, you see the hex isn't down. Of course, you can look at the all-time high, and then here it's like, oh, hex is dead. It's done, but it's not. At a penny, it's way up from where it started, from its origins. And those of us who are invested back then understand that first and foremost. But it's just a consolidation, a pulling back of the bow, the kinetic energy just winding up, and then with the whole space talking like it is, and I really hate to bring up this example, but I mean, it's there, it's in everybody's face, and we're going to benefit from it. All these enterprise companies trying to come into crypto right now with their 3-letter agencies behind them, helping them. They're talking about bringing somewhere between $7 and $10 trillion into the market space. And we saw what happened to Hex when, $3 trillion came into the market space. What's going to happen in 7 to 10 trillion comes in. I mean, it's just looking really, really good. And I'm bullish on that news. I'm not happy about it because I don't want those institutional investors in our space, to be completely honest. But if they're playing the can't beat them, join them game, then okay, let's bring them in and see what they do. But I'm not happy about it, but we're going to get a payday from it. That's for sure.
Yeah. I mean, and it's, it's probably not the worst, because in crypto, like, what's different about where they come from is usually they have some unfair advantage in other markets, but at least in crypto, they aren't really granted that unfair advantage. And even in crypto, like, companies that you would think have some type of unfair advantage, like with FTX, like, they seem to have some unfair advantage. It's like they blew up, like all these big hedge funds. It's like, it's almost harder to play at that scale because it's something, that, like, where like liquidity matters, and you as a regular person with $10,000 is going to have a lot easier getting in and out than a major institution with, billions or trillions of dollars. And so I think that it's, at least it's not something that they have like some like unfair advantage in, other than size. But if anything, the size can kind of be, there's kind of some detriment to their size relative to the ecosystem. So it's kind of a, plus and minus type of thing there.
Yeah.
But what I wanted to, kind of ask you about was like your experience, just like, like through like the movie and like when that was being filmed, like what was that feeling like? And like, what did you learn from just that whole thing?
Well, I've learned that the biggest lesson I've learned is don't let everybody see or publicly all of your emotions in a bull market, right? Especially when they watch it in the bear market. So, I mean, look, it's euphoric. We're all, feeling it. Especially if you're in a position where I was, I went through cycles from 14 to 17, and then went through the 17 cycle. And then after that went through, our big cycle. And, our last big cycle with Hex was the one that finally, made me into, no matter what happens, it looks like crypto had done it for me, even where we're at a 90+% dip. So that emotion came out, and when we were filming the film, and then when you see it afterwards, when you're in a bear market and people are saying, dude, you wrecked your friend, and, and all this other stuff, it's like, ugh, it's cringy, and it's also cringy to see yourself on screen, period. I don't watch my own streams. I just don't. I don't like it. Yeah. I don't like hearing my voice, all that stuff. But it also, taught me how important all of this is that we're doing, because, I honestly and truly believe that the Hexican community is the strongest, the smartest, the hardest working, and the biggest badasses in all of crypto. Because nobody can hold a candle to the things that we've done and the things that we have accomplished. People like yourself that are building the things that you're building. Who else made a movie out of their community? Who put $3 million together to make a movie about their community? And that movie's out there forever. I mean, it's going to end up on a streaming service very, very soon. And when a bull market comes, what do people do? They start looking up crypto movies. Oh, hey, let's watch something. Let's watch a crypto movie, and they'll Google crypto and they'll find it in their streaming service or wherever, and they'll watch the movie for time immemorial. I mean, it's gonna always be there now, and it's always gonna tell the story about Hex, and it's always gonna tell the story about this community. And so I'm proud of that. I'm glad that we did it, and that communities that our community is out there doing things in crypto that others haven't, and we're doing it organically. You see some of these other communities where there's foundations or companies, corporations behind them trying to put things together. No, we did it on our own, man. We went out and had our first meetup, and there's 5 of us met up. And then we had one in Vegas, and then there was 150 to 200 of us. And then we started having, online meetings and conventions, and it's just grown from there. And it's a totally organic, totally badass community, just from the ground up, So, that's what I've learned, is that we are really what a decentralized community should look like.
Yeah, I think it is pretty powerful. Just kind of like the level of organization for, because really, it's kind of like a whole cottage industry has developed around like entertainment and events and like things for Hexicans. It's like the movie. It's like they, built making a movie to cater to that audience, or events like the meetups or the conferences to cater to that audience. And so like I think it's like a sign that there's like that people are drawn to it, and like outside of just the financial aspect of this stuff, it's like they kind of are craving more than just that, which is very unique compared to other assets. And I think that leads to there never really being a dull day around here.
Yeah, I think that it really gives the individual an opportunity to be invested in the marketing tool or the community itself, and take on a role in it that they're part of changing the world for the better. Because crypto has the ability, and especially Hex and what Richard Hart has created, has the ability, with all the tools that you guys are creating on it, to fix finance. Like, you guys are making tools that the real world has either screwed up, doesn't have, or work horribly today. And, with the perpetuals and with Hex and Hex staking, and the new L1 bringing Web3 into fruition. All of the tools are here to literally take the world into the 21st century when it comes to the internet and finance. And to be a part of it, and to be able to, break bread with, shake hands, high fives and hugs, with the people that are doing it, and being part of it, I think it's attractive. People want to be part. Like on the Pulse Chain tour, people come and visit our meetups and whatnot, and we do some education, we do some DeFi talks, we get some of the smartest people in Hex to get out and speak on stage, and the people love it. And afterwards, we don't just end it and that's it. Afterwards, boom, and beforehand, it's a meet and greet. We're sitting at the bar, talking to each other, having a couple of beers, drink and having fun. And then boom, we go in the meeting, then we come out and it's, hey, another meetup at the bar, everybody hanging out, high fives, hugs, and handshakes. And then, hey, for those who want to go hang out and do VIP, hey, we're going to go eat dinner at this nice place here. We're all going to sit down. We're going to get to know each other really well. And that's what happens. And that has made our community so strong. These meetups and the Pulse Chain tour and what the Crypto Spa Book did on the Hex tour before that. It's just been codifying the relationships in the Hex community and the Pulse Chain community, and just making these people part of it and making it stronger.
Mm-hmm. Yeah, for sure. I think it's a really important factor there. And how many people do you think that you've have attended those events? Do you think?
How many people?
Yeah.
This tour in the bear market, it has been abysmal. Abysmal. It's been tough. It's funny, and it all goes to show what we all say and talk about. It's like in the bull market, your phone is always ringing. When Hex was at 50 cents, like, people were just dying to get me to onboard them.
They're out there making a movie about everyone's paper gains. and then they have a guy in a pirate suit calling his boss saying, "I'm the richest man you'll ever meet." That was the core of the movie. When I heard that, I died. I'm in the theater. I'm literally dying. I was like, that's the quote of the century. And yeah, I mean, I think that psychology of just it of like, that's, I mean, no wonder it's like that's what's making the price go up is like all the interest right there. And it's
Oh
kind of like
yeah.
self-reinforcing. But then on the other end of that, it's like in the bear market, like, no one's
No one wants to
calling
touch it.
desperately trying to learn about it.
Your phone's not ringing, and it's like right now I'm thinking about it. I'm like, well, who do I need to onboard who's going to be calling me in the next 8 months? Who's going to be ringing my phone? Who should I be calling and saying, hey, look, it's time to set up your wallets. It's time to set up your onboarding platform that you're going to use. It's time to, get you set up and get your hex now, because you're going to be pissed if I didn't get it to you at under a penny,
Mhm.
and that's what we should all be doing. Or like my boy, Mikey, my good friend, it's like, what have we been doing? Well, we didn't go, oh my gosh, he bought at the top, he's wrecked. I taught him, you're DCAing now. Now you're going to change your buy-in. You're going to change your average. Your buy-in is going to be a lot less, because you're going to dollar cost average in all the way down until it just bottoms. And that's what he did. So
Mhm.
now he's changed his price point, and now he doesn't have to take it as such a loss versus,
Mhm.
oh yeah, he spent $100,000 at 54 cents,
Mhm. Yeah.
but he's
I
bought
mean,
all the
I
way
really
down.
commend him for being, like really showcasing that experience because that's a very real thing. Like, and I think that's what can actually really, I think, connect with a lot of people because that happens across all assets. Like, think about all the people that were getting into like the stock market, like through like after COVID and all that. Like,
Mhm.
they're down. Not the scales of some of the crypto stuff, but people are down bad there. People are down bad in like some NFTs, like across the board. People and I think that like that character actually paints something that's like very relatable and something that people can learn from. Like I think that like seeing kind of that psychology of like kind of that like FOMO and like seeing someone that experiencing like really high performance on something and then like you like not getting in and then when you finally get in, that's just like the mark like the cycle high. And I think that that's like something like really relatable and also something that a lot of people can learn from. And and I think it paints like a good it just paints kind of a good picture of like like these are the downside risks that like everyone should be aware of. Like you should always be aware
Mhm.
of massive markdown of your investments. And like I think that's like actually a very useful thing to set the frame about is that like prices can go down big.
Yeah, I mean, people, when people clamor in, it's usually about halfway through the bull market is when you get your institutional money coming in, you get your high end investors coming in, moving their coins around or putting capital in, and then that last 20, 15, 20, 30%, whatever around there is all the FOMO, and those are the people they get hurt, because what happens is usually on its retracement, on its way back down, on its correction, you're going to see those people, a lot of them jump out, 20, 30% of those people are going to jump out, or more will jump out. And those are the people that lose. They bought as it was going up and they sold as it was dropping out on the bottom. And the institutional investors and the smart money, they sit there and scrape the top off of the 15 to 20% off the top, and then they buy back in and scrape the 15 to 20% off the bottom. And that's the way it always goes in these markets that are this volatile, they do it. The smart guys that trade on a regular basis that make money trading do that in the regular stock market. It's not anything new. I mean, the line of the crypto market, the stock market, the NYSE, the CBE, any of these things, the line is from down here to up here, period. That's what they do. And in between there's, emotions and market, sentiment. That's all that is. And that's where people either make fortunes or get hurt, is in those, those squiggly lines in between the line from the bottom to the top. I mean, let's look at Hex in perspective, which I just said a minute ago. From where we started, from those of us who got in the first month of Hex, we're up a ton. We're up, period. End of story. At a penny, it's up. We never expected it to hit a penny. We were like hoping for it to hit a penny. And when it hit a penny and went beyond, you know, okay, now that's the new norm, right? I mean, so, 54 cents and then down 90% from that, that's just a market move. That's all that is, and now that it has actually found a resistance and it's staying there, that's telling me that it's getting ready for another move. I was just looking. I sent this out to Kinetics and a couple of other people. I was looking at, oh, look at that, and I see my payout every day. What did we get? 6.65 today or something? Nice. Maybe a little bigger. I missed it. But I'm looking at whale alerts through an app I use called CoinGlass, and I'm seeing monster moves. Humongous moves. I'm looking at Bitcoin. This is just today, and this is just a handful from today. 75.79 million USD moved from an unknown wallet to Coinbase wallet. 75.76 million USD moved from an unknown wallet to a Coinbase wallet. 15 million moved to a Bitstamp wallet. 27 million to a Bitfinex wallet. 50 million moved to a Deepcoin wallet. And that's just a few of them. Like, this is what's happening. I wasn't seeing these type of moves, a couple months ago. That's what's happening over the last few weeks, is just day after day after day, hundreds of millions of dollars moving from Bitcoin wallets back and forth all over the place. And so the moves are being made. The OTC trades are happening. I can't prove that those are OTC trade, but I can almost guarantee you that that's what's going on. If these institutional players are bringing money in, it started. It has started. The bottom is in, and the moves are starting to happen. And once they start moving that capital around, that's when this thing's going to just take off like crazy. So it's going on. I mean, it doesn't take, I'm not a rocket scientist in crypto, that's for sure. But if I can see this stuff, everybody else can probably dig into it deeper and start seeing what's going on here.
Yeah. But I always wonder what the next cycle looks like, because what can happen is, like, because something happened so obviously in the last cycle, and then everyone's now learned from that. Like, now everyone's equipped with that now. Like all the people that, like, I mean, even like, thinking about, say you bought Hex when it was 1 cent, like right at this time 2 years ago, and then you rode it up to 50 cents, and then you rode it all the way back down. A lot of those types of users now have that experience to learn from, where they're like, oh, if something moves parabolically from 1 to 50 after it's already been on a run, then maybe I should look to sell at around 20 or 10 or whatever their number is. So, like, there's now people from the last cycle who are a little more prepared, and that can kind of taper off some of those like massive moves. And you kind of see it as things age and get more mature, like with Bitcoin.
Yes.
Like this latest cycle, it didn't even really have that kind of characteristic, like, blow off top. It kind of just like marched its way up and then kind of ranged pretty high, and then it broke down. So it looked kind of different, and it looks like just like things maturing. And I think that maybe we might see that with Hex, but it may also be a good thing, because in some ways I feel like the Hex price went too high. Like, because what that does is it sets the stage for people to buy really high and then be now a new source of sell pressure. Like, anytime it kind of reaches up, those people are like, all right, I'm going to cut my losses. And so, like, in some ways, I think that, like, a little bit less dramatic moves to the upside, I think that can in some ways benefit the health of, like, the ecosystem. Because, like, for instance, I think like something like 100,000 stakers had been onboarded between, like, during 2021, and that huge increase is what made the price go so high. But because there were so many of those people, I came out to, like, I think like half the users bought when the price was above 12 cents. And so, like, that type of overhead, that's like future overhead. And so I think that, like, the market kind of more maturing,
sell pressure baked
like,
in,
moves, maybe like just a little bit kind of tapered out, but I think it can create more sustainable long-term growth of the assets.
Yeah. And I also wonder if, maybe the blow off top and the price moving maybe beyond it could have, should have. Was it because of how the liquidity was set and how easy it was to move the price and to get it to do that? Because Richard gamed the system on that and said, "Hey, look, check out when you keep the liquidity low, we can make the price go up, very, very high, and the supply and the monitoring and metering of that, did take us to levels that nobody had, when you went 10,000x, it was
And I think
insane.
the sacrifice too, like how
Mm,
people were like buying hex to then sacrifice. So it's like there was buy
true.
pressure. It was almost like a buy and burn in a way because that hex just sits there. And so it
Yeah.
was like kind of like outside of a normal like market or normal like trading cycle of hex itself. Like there was a lot of buying and then now it just sits there. And so I think that like the timing of that also was a big part of it, and also like like you said about the like relatively low available supply on the market to even buy in the first
Mhm.
place, and also I mean with the like Uniswap pools, it's less so with the V3 pools, but when there were V2 pools like more dominantly, like on Uniswap, it
Mhm.
actually created a situation where when price was at an all-time high, it also had all-time high liquidity to sell into, like just the
Yes.
way that the Uniswap double-sided pools worked. And
The
so,
USD pool was the high, USDC pool was the highest, so it made for a lot of sell pressure to be absorbed into that.
yeah, yeah. But what's crazy is that it like during the bull market, if ETH was actually the one, because ETH outperformed Bitcoin and ETH of course outperformed the dollars, um, like there like early on when it was pegged to ETH, that actually helped the USD price of Hex move early on because the main pool at that like early from like during 2020 pretty much was an ETH pool. But
Mhm.
then over time it moved to being dominantly
USDC.
USDC. And so sometimes I wonder if like it had stayed like ETH had been the main pool, like what would it have hit in dollars if like it was kind of paired with ETH primarily through 2021, and if it was all Uniswap V2 pools, like that would have been it could have been shocking what it
Yeah,
could have been, but it would have been outside the range of like what is like a good price. It was
feasible. Yeah,
highly
what was
overvalued, I think,
feasible?
but it could have made it even higher in
Yeah,
that sense.
and
Um,
then
how do you think that like what do you think has been the impact of like the ehex and phex and kind of where do you where like how do you kind of approach that for
so I've always thought that hex itself was the product of all products in crypto, and that it's going to become very rare, and it's already showing that it's going to be very rare. And with it launching on phex with no extra supply, it's there's a low amount of supply out there. And I think that, and I talked to Lamont earlier about this and wanted his opinion from a financial expert's point of view, is that the institutional money is going to see Hex as something of extreme value because of the OA being able to keep the return of the interest bearing Hex that's coming out of the APY. It's going to keep the APY high because even if you were to stake all of the Hex that is liquid out there right now, which you never will get all of it. They're always going to have some liquid holders. But if you were to get most of that staked, you're only going to drop the APY to a certain level because the OA is the one that's really controlling the APY, not the stakers. The stakers are going to barely make a dent in bringing the APY down, even if they all staked. So when institutions find that they can get a guaranteed 20 something percent interest on something that starts to hold value and, like you said, starts to stabilize, I think that's when Hex becomes very, very rare. That institutions are going to snatch up what's left of the liquid supply and stake it like they're going to utilize it like a bond, as long as the price starts to stabilize, as long as crypto comes out of this crazy, uh, youthful stage that it's in, where it's got nothing but volatility. And you said it yourself. You said, Bitcoin is starting to show different trends. It's starting to show that it's starting to stable off a little bit. like, like stock markets. Stock markets were very volatile when they first started. They caused a lot of crashes and booms and crashes. And now they're we still have some volatility, but a lot less than, like they say, the crypto space, where you have a 90%. Anything that goes 90% down in the stock market is like freaking death. That's a death spiral, But in crypto, it's like, another day, another cycle. We'll be back. Whether we're garbage product or not, we're going to be back. I mean, look at all the garbage products that got destroyed in all of these dips, and they're right back, to their levels, right back to sitting on top of, CoinMarketCap's lists and all that stuff. So I think that once institutions find out what Hex is all about, it becomes very, very rare. And, and I use the statement a lot, people are going to be standing in line waiting for your stakes to come out so that they can get a hold of the Hex. And that's why Richard always would say, you guys do not understand and realize how absolutely high the price of Hex can go. He used to say that to us all the time, and we experienced it when it went to, in its first 3 years, to 54 cents or whatever it was. I mean, we did not expect that at all. That was like way out of that was moon math. That was like, people were laughing at us if we were talking even a penny or 5 cents or 10 cents. And some bitch went to 54 cents. I mean, that is like way beyond a lot of our moon math, and to do it in that short of amount of time just proved that Richard was right. This thing really has legs, and nobody really knows about it. That was like people in the know making that happen. Most of the crypto space thought Hex was a scam. Most people that look at it, like smart folks like Lamont Black, financial freaking guru from DePaul University, who teaches crypto courses, looked at it first and laughed.
And then he gets persuaded. Yeah, I think that was. I think I really like that part of the storyline where he, kind of how it kind of broke the fourth wall, like after the fact, where like once he kind of started talking to everyone in Hex, he like totally was. It's almost like he was, he saw the light in a way that maybe just in the time frame of the movie and the, it wasn't able to kind of come out that way.
Well, I talked to him today. We had a conversation today, and I asked him, I said, what was it? When we first started filming you were laughing at it. You were just going, there's no value here. And you're a crypto guy. You're a finance guy. You understand this stuff. You're a professor. What about it was, and you know what it was? He said, well, the first thing I did when I heard about Hex was I went to the website, and the first thing I saw was it looked like a scammy website, and all this, mumbo jumbo about making this kind of, he goes, I see 38% APY and I laugh. It's like, this is a total scam. And then everything else you Google on the internet is scam, scam, scam. And then, and then I get thrown this whole thing about T-shares, and I'm like, oh, this is just too confusing to understand because it doesn't fit any narrative that he's already understood before. So he was just like, just pass it off, and find out. Let's ask this guy, what's the value? What are you talking about? What, And he goes, and I wasn't getting any answers because I didn't know what he was talking about. He goes, and then I finally got Dev Kyle's information or white paper on the T-share. He said, and then he goes, it was confusing, and I spent a lot of time reading it. He goes, but I started to understand and go, oh shit, there's something here to this. And that's what got him asking questions. And then of course the Hexicans had the best answers to fill in the gaps that he was missing. And when he took it to Twitter after we had filmed the movie and started having some conversations with people, he realized, wow, there's a community here that's helpful. They're filling in the blanks that I'm not understanding here. And the blanks that they're filling in are making sense. Now they're connecting the dots. And he said that was it for him. He started connecting the dots through the Hexicans. And, and it was always us. It was always us teaching everybody, hey, this is why this is this. This is why the OA is doing this. And this is what T-shares are. And, and so that's what kind of brought him around. And now, I mean, he's damn near a Hexican. I mean, he has some issues with the OA and the ownership. But he says he can argue both sides of centralized ownership. There's a benevolent king and then there's an evil king, and which one do you have your hands on? And is that the risk? Because every asset class is a risk. There is a risk.
Yeah,
and we
since
knew
it's
that.
so publicly known, and so like it's like fully transparent. It's like that risk is already priced in. Like, so yeah, like it
Definitely
certainly
priced.
exists as a risk, but and that's just like it's just one of the many things that that are part of the risk profile.
Yeah, and you're 100%. That's the best way to phrase it. Is it's been baked into this thing for 4 years,
Yeah.
and we've seen everybody's known about it from the beginning. Richard was upfront about it, and we've known it. Those of us who've been around as a benevolent actor within the ecosystem, and it's a feature, not a risk.
Mhm. Yeah, and also what, like, the OA itself over time, I mean, even though the OA does have,
Mm,
something like it like, because I built this tool that lets you track all the OA activity, and you can
freaking
see
brilliant.
how it has, like, sent out all the hex, and then all the hex just ended up in the sacrifice address, which just sits there. But the OA, it has it has staked hex in the past.
Uh-huh.
No more stakes after
Big
big
payday.
payday,
Yeah.
and so over time, as those stakes end, and provided they're not restaked, the OA will kind of just bleed out over the next couple of decades and have a smaller and smaller percentage because the majority of the yield is going to non OA stakers. And so like over time, the OA's portion of the whole does, dwindle, assuming it doesn't stake. But I actually see there could be some benefits of the OA staking significantly,
Mhm, mhm,
because since the OA has the majority of the supply, but it does not, it's not staking it at a same rate as the percent of its own supply, then what that means is that the user owned supply is absorbing the annual inflation. And so
mhm,
the 3.69% inflation in effect is, if you only consider the user owned inflation and measure the inflation relative to that, then it comes out to about 11%, and which I do think is kind of high. It's beneficial in the bull market because it like amplifies the like perceived performance, because like you're earning at a high rate, and then then the price is also going up.
mhm.
But I think that the like even if the OA like was to stake, half of it for 15 years, it would bring everyone's um,
Hmm.
measured APY down. But since everyone is growing and shrinking at the same rate, it wouldn't impact like, like you and another staker's like piece of the pie relative to each other. Like as far as user owned supply, like, you and your neighbor both getting it. If you're both growing at the same rate, it almost doesn't matter exactly what that hex per
Yeah.
T-share number is, because everyone's growing and shrinking relative to other
Yeah.
users at the same rate. So like I think that there could be benefits in the OA drastically cutting that unit for how, like what the payout is per day, and
Mhm.
actually seeing benefits from having just decreased user experienced inflation. So
To
I,
regulate the inflation, kind of like a Fed situation
yeah,
almost,
yeah, exactly. Like it's been
to keep
effective
the.
in like a marketing technique,
Mhm,
as the high yield, especially at the time. I think it was even more effective because in other crypto systems there was other shockingly high APYs. Um, but on the other hand, I think that it can that like I mean like what you said about Lamont seeing 38% APY,
mhm,
and just kind of being almost turned off by that. It's like that high APY unit, it draws in a type of audience that's very common in bull markets in crypto, like a high risk profile
mhm.
type of user, but it turns away kind of another class of user. And so I think that there could be even while like the marketing benefits of the high APY, kind of help take us to where we are now. I actually think that there can be a way to take a new marketing approach with a lower APY, and then experiencing the benefits of just lower user experience inflation. So that's what I mean. So far, the OA hasn't done anything since the
Big
sacrifice,
pay,
and
sacrifice, yeah.
but if I was the OA, I would I would do something like that with now like a new phase where it's like on paper it's tapered, but from the user's perspective and like relative to everyone else, it's still would be the same.
Yeah,
And
because the disparity would only be between the stakers and the OA. Like you said, not staker to staker. It would be staker to the OA would be the only disparity in that situation.
yeah, because by not staking, he's basically giving up. Like, the OA is basically just like giving the yield that it could have got to all the stakers. And so by staking, it just kind of cuts that amount that it's effectively giving away by bleeding out. And so who knows? But I mean, I not only have no expectations, like I try to have negative expectations. Like, like I never assume
That's the
that,
safe way.
yeah, because truly anything can happen, and that's kind of at the core of like not your keys, not your coins. Like, the OA, that's not my keys, so I have no control. Like, my say on it is irrelevant.
Not your emotions, not your expectations, not your emotions. Yeah,
Yeah,
don't worry about it. And we had all these conversations early on about the OA, and we talked in depth about it, and there were so many things that we were like, well, if he did this, if the OA did that, if the OA did this could happen. And it was like, and none of it ever did. And in fact, nobody was really talking about the OA coming in and kind of saving everybody's ass on big payday and saying, nope, we're not going to let everybody dump this. We're going to come in and we're going to stake, take most of the supply off, give everybody a small supply, and break the hearts of all those people thinking that they were going to dump on day one of big payday.
Mhm.
So that was cool to see the OA act.
Yeah, that's a good point. It's done what I'm suggesting before.
Yes, it's already done that. Yeah, it's
Yeah.
already acted benevolently and helped the staker class out. So who's to say it wouldn't help the staker class out again? I think it's there really as a relief valve in case the pressure on the like you said, the inflation gets too great, then it can act as a relief valve, and it doesn't have to stake a whole bunch. It could just do enough to bring the APY down to a level where the inflation is going to be a modest inflation versus the inflation growing over time, like you're saying it could. So yeah, it's there as a regulating body is my beliefs, and to be used when it needs to be used.
Mhm. Yeah, and because it has to bear the risk of whatever it does with it. Like, it has, like, because as is, it'll bleed out over a couple decades, but it could grow its own amount by staking. And it's definitely kind of a tough decision to make.
Yeah, and it can unstake too.
Yeah, like it could stake, and I guess the only benefit it has is because it absorbs half the penalties.
Yep.
It basically doesn't get a penalty, or it gets,
Yeah. So
like,
if it's
penalties
bleeding out, it's still getting the penalties.
cut in half.
Yeah, so
So
it could early end stake and get half the penalties on that, and it could do all kinds of things. And again, it can regulate because each one of those options that it has will create a different result in the system. So it could do what's best for the system if needed. And I guess that's where a lot of people can scream about decentralization and not decentralization. But if it's acting in the betterment of the system itself, then maybe it's okay. But again, that's what governments say they're there to do. That's what our Fed says.
It's like, I agree that there's a lot of value in discretion. Like, because if it was like fully decentralized decision making, it's like you're going to get the average of all the ideas. Whereas, like, if a user who's taking their own risk, choosing on how they're going to hold their assets, chooses to hold something in a way where there's, where, like, there is some level of discretion, where, like centralized decision making, it's like, as long as they're, like, fully aware of all the risks and all the dynamics of that, like, leaning into some discretion, so long as, like, because it's not like they can just, like, print as many coins, like new coins, as they want. It's like they're what they can do is fully like known and public. And so, like, having some level of discretion on how that APY is set as, like, a marketing effort, so that's basically what it is. It's fine to lean into discretion, or tolerate a little bit more risk of centralization, because you get that discretion, and, like, it all just gets priced in. And also, it's like, the reason why I think it is okay to accept that is that like the amount of US dollars that are actually realizable from like, say, like, total like imaginary horrible situation where all those coins just get sold, the amount that it could actually extract is tiny relative to the amount that was produced from the Hex like first year launch, like the ETH that went into
Yeah.
that, and then its growth, that is like hundreds of times larger
That is.
than any amount that could be extracted. So it's like, and then not to mention the 600 million from the pulse of non-hex assets in the pulse chain sacrifice, of which like only 10% was actually spent. Like it's like it's almost like that's peanuts relative to the other ways that it like if it was the need to like monetize that asset, like it just makes like the worst case scenario is something that like seems like you know small peanuts relative to that kind of the whole broader kind of unit that is. And so it's like that's why I tolerate because in other cases you really can't tolerate that risk.
No.
In certain and I think that's where like the big growth opportunity is, that there's a lot of risk that people are over indexing for, like the risk of centralized ownership or the risk of kind of like the personality risk that like kind of had turned people off in the past, and just like all these risks and exits, like it's like way overpriced in. Like people are assessing this risk to be much greater than it actually is. And like that's what markets do, is they reprice risk. And that's kind of like that's where the upside comes in, is like the market kind of reassesses the risk profile of these different things, and things happen that even further de-risk it. And so like that's what gives me confidence that there is another cycle, because a lot of cryptos won't have another cycle. A lot of cryptos, like, well, I mean,
they
and
walked away from
did the 2014 2017 cycle. Like I bet you have some wallet out there that has just like shit coins that you don't even remember, like sit in dust, like it's not everything kind of has like that second wind. And I think that Hex
product market promises. They don't have product market promises.
But and I think that like the main thing that's been, I think, kind of making the bear market in Hex feel kind of even amplified is how we've kind of grown into a whole ecosystem, and what that means is that there's a lot of more self-inflicted and external competition. It's like now amongst the Hexagon economy, it's like you had Pulse Chain and PulseX in there, and then that's like kind of it's been values kind of been redistributed, and then now there's all like all these other assets that are launching, that they're experiencing high demand from certain audiences. And so like now it's like there's kind of been this like internal to Hexaco competition that was kind of that
it's inevitable
themselves, and many of them already have exposure to both of them, so it's kind of a wash there. But it's spread out there. But then now like other things that launch, because kind of the same things that allowed Hex to really go on a run, going from something where no one owns, where a couple thousand people own it, to now 100,000 people own it, like that kind of starting from zero and then growing like that. That's something that Hex already has experienced that other things have not experienced yet. And so like there's a lot of things that are kind of pulling demand, and also people, but just where we are at the cycle right now with like a lot of people, if they buy when the price is really high and then they're sitting on big losses, in order to regain, they want to make it back in one trade, so they're willing to take on more and more risk. So like,
but look at how low risk this ecosystem is. Like, okay, so you just mentioned that a lot of the assets were diverted, a lot of the value of the asset in Hex was diverted into these other projects. But look at why that happened. It wasn't like another shitcoin was being developed. Let's just talk about your projects alone. The things that you've done are value add to the system. The things that you've done have proofed the T-share as being valuable and something that you could build things on, something that you could bring more products to the market with. Like the Hex product itself and the T-share created a new marketplace. You're not just another shitcoin sitting on the market. You've created a valuable product with what you've done, and other Hexagons have done so also. So we're sitting on such upside on this. It's so bullish to look at it that way, because in the rest of the crypto space, like you said, There's shitcoins that are just going to get left in the dust. There's other ecosystems that haven't done anything. I think Polygon is the next one. It's probably going to bring the end of the next bull market. That thing is so destroyed, and everything else is so destroyed beyond it. Look what FTX did, and all this other just garbage, utter garbage out there. But the Hex ecosystem, viable products were built on it that diluted it and pissed everybody out, and everybody's mad about it, of course, because number go down. But the value that's been created is going to only perpetuate and become more in this next cycle, because people are going to see the value in them. And it's also a shift of the paradigm shift of the crypto space too, because we're leaving this day trading mentality and this scamming technology, the scamming ideology for a more of and I've been equating it to kind of the Warren Buffett style of investing, the long hold, the value add, the blue chip. This isn't a space for coming in and day trading. You're going to get wrecked if you do that. Get in here, get good assets, put them in high yield, interest bearing, cryptos that are going to help you to become something in the future. Give the small guy a place to actually play versus somebody who has to come in and either get wrecked or get lucky, and I think we're leaving that, and you guys have proofed that. And the only place to go from here is up and change the whole crypto space. It's really happening. I mean, true DeFi is here now. Web3 can be created now because of what the L1 that just got created, which is Pulse Chain. And I got to throw my hat off to those guys over at the Tang Gang. Those guys are really impressing me with their grassroots development and organization of a marketing tool that is going to go out and I think usher in Web3. When I was out in Europe trying to talk to people, this was before Richard launched Pulse Chain, before he even said it was going to get finished, and it was way before he was even starting to say 2 weeks. I was saying that Pulse Chain, if it does what Richard says, there's going to actually give a place for Web3 to exist, because everywhere I went, the problem with Web3, the problem with everybody's Web3 project, from Ferrari to Selfridges to all the places that I saw in Europe that were trying to launch Web3 projects, they couldn't, because the blockchain couldn't support them. The blockchains were going down. They were garbage, and they couldn't do what they wanted to do. Web3 is ready to go. I mean, the artists, the talent, all the things that want to do Web3, they're there. They've got their sites built, their protocols done, everything's there, but there's no blockchain to support it. But here's Pulse Chain, finally a blockchain that can support it, that's got throughput, that's got cheap fees, that they can go and do whatever they want and have complete ownership. It's decentralized. There is no centralized ownership, fully proof of stake. And now we have grassroots community developers like these guys in the Tang Gang. And at first, I'm going to admit it, I was like, oh my gosh, a new set of clowns on, the Hex ecosystem. What are these guys doing? Oh my gosh. And then I saw who was involved, and it was like a lot of the people that I had a lot of respect for. And then watching them do what they're doing, and seeing how they're helping to bring projects in. They're not out there trying to bilk the system. They're not trying to bilk the hexagons and sell hexagons junk. They're like, let's help onboard people into Web3. And I think that's what Pulse Chain is going to do, is actually usher in Web3, and watch what it does after that. And Hex is going to usher in. I mean, there's so many different angles that this thing could conflagrate from, from fixing finance to bringing Web3 to fruition, to becoming like the premier decentralized exchange that people can actually go and exchange value without worry. Like what FTX just did to everybody is afraid of crypto because of what FTX did. But now we have something like Pulse X that can actually change that and fix that. There's so many different directions this thing can conflagrate from this next bull market. I'm freaking fired up, man.
Yeah, I mean, there's kind of some for everyone, and like because that's what I really realized is that, and how I've seen kind of the hexagon ecosystem change is that like the variety in personality types and the things that people like, and people's like risk tolerance, and like it's a big it's like in the whole expansive thing. And I think that like despite kind of capital being spread out instead of being concentrated around Hex, maybe it's worth it for it to be like for all these different things. Cause then like if
You're
one
damn
type of
right it is.
category, pops off with pulse chain, then it kind of, brings in, you know, it just brings in a lot of attention. And so I do agree that kind of like the trade-off between, kind of like the competition amongst it's like our own ecosystem. I think that it probably is going to be worth it at the end of the day.
Damn straight it is.
And like I think that like I definitely try to like, because I think where a lot of people, it's not like they don't want there to be like new stuff. It's more like people want the stuff that they already own to be popular and to be like hyped up. And like I think that people kind of draw lines in the sand and amongst each other because like of course you want the stuff that you own to be like the next hyped up thing. But the way I see it is that like I'm just thankful that we're all here doing all this, and like anyone's gain, like that I'm proud of them for doing it, even if I don't necessarily hold it.
Just glad to be here.
Yeah, but I also make sure to give myself a little bit of fun money exposure to just like any weird little thing that pops up that like catches me at the right time with the right message. Like you said, like with Tengang, like the thing that actually drew me to that whole concept was just it being centered around an orange. Like it's like I literally eat numerous oranges a day. I have my whole life. Like it's my favorite food. It's probably the single food that I eat the most is, and I just love good citrus. And so like literally just like like it doesn't even need to be some advanced thing like, oh yeah, orange, good. Like it's so I definitely try to keep myself open to just like any wacky thing, because like like Hex at the start was kind of wacky, and so it's like I do appreciate that, how like it's always growing and evolving, and and I get a kick at all this stuff.
Most world changing things came from misfits, and that's what I like about this community and the birth of it. It was always about the misfits. It was always about the downtrodden. It was always about the underdog. It was always about, the greater, and and crypto is really the underdog of the financial world, right? And then the Hexagon being the underdog, and Richard being the underdog founder of the whole system has been, I think, what has really, really strengthened this community and the Hexagons themselves. I mean, it's like when you're pressured, when you're beat on, when you're battle hardened like that, it does nothing but forge and anneal those community members that are in it. I mean, I have some conversations with people in the Tengang. I'm bringing a project to them to help to onboard. And they came to me and asked about Pulse Chain. I said, "Oh, I got the people. You got to talk to these guys," and of course they came in, and then just the brilliance of those guys and how they're doing this. And it's not just hype, and it's not just orange colors and girls in bikinis and stuff like that. It's real thought out technique for onboarding people organically into an L1 without there being any money necessary. Let us show you how to onboard. Let us show you how this is to be done, and it's just the brilliance of the community and the resourcefulness and the willingness to do the things that a community is supposed to do to make an L1 popular. These other L1s are putting, foundations together and VC money and people in think tank rooms to figure out how to market and how to bring projects to the table. And that's not how crypto is going to grow. That's not how it's going to happen. That's not how an L1 is going to organically blossom into something that can change the world and usher in Web3. This has to be organic. It has to be people really out there doing the work. And that's what I'm excited about, is seeing this community doing that kind of stuff. So my hat is off to the Tengang. I'm really impressed with those guys and what they're doing. And it might be, and it might be memes and NFTs and stuff, but there's a real deep rooted organizational desire in those people to do what they're doing. And I'm really impressed with it. I'm really happy with what we have in this community. And I mean, look, we made a freaking movie. How many communities are making movies? I mean, we've made perpetual derivatives of the asset that we all got in on first. I mean, the stuff that's being done by this community has no no equal in the crypto space. No one's doing what hexagons are doing. Nobody.
Yeah, I think that we like if crypto, like a lot of the kind of mainstream crypto people, like they think that they're the counterculture, but like they totally are. It's like hexagons are like the counterculture of the counterculture.
Yes,
And
exactly.
I think that there's something, I think there's something empowering in that, where you like, you know, it definitely does bring people together. Like people definitely kind of align, where even if people like drastically disagree on certain aspects, like and you see that with like there like a lot of kind of disagreements, and you know, people having completely different perspectives on different topics, but it's like that all can exist, you know, amongst, you know, kind of the ecosystem. And I think that shows that there's something, you know, valid, you know, in this space.
Well, there's something that we say here, and it's that we stand on the shoulders of giants. You know, I mean, we are that powerful of a community. And when we team up with one another and we tap into the smartest, brightest, the best of us, we can't lose. I mean, it's an amazing community. I love what they're doing. I'm gonna be here freaking cheering it on all the way. I ain't going nowhere, man. I want to stick around for this, because we're on the right side of history. And what better legacy to leave than to be somebody on the right side of history doing good in the world, and especially utilizing this space for what it was supposed to do. Because for years it's been just a cesspool. Like crypto has been an utter cesspool, and the whole world is right to be looking at it like it is. The regulatory bodies looking at it like that, I don't blame them. I don't, because it was a cesspool. This isn't. What we've got here isn't. The L1 that we've got our hands on isn't. The crypto that we've got, Hex, isn't. The projects that have been built on it aren't. They're world changing, and the world deserves them, and they can't stop them. They're all immutable, coded freaking things that have been thrown out in the internet for forever and ever and ever, and will not be able to be stopped unless they turn the whole switch off the internet. So now it's up to us as the community to go out there and deliver them to the world and show the world that there's a better way of doing this.
Yeah, I mean, I fully agree. And I think with that, I'm gonna have to hop off here, but I think that's a great way to kind of cap this off. Really, thank you for joining us today. This is a lot of fun. I'm glad we could connect. I feel like it's been so long, and
it has
kind of in the same space, but I'm glad we finally got on together.
Me too. Hey, Axis said in the chat that you need to come to the December cruise.
I looked into it. I cannot make it that week.
It's going to be the Hex birthday and everything, man. The end of the Pulse Chain Tour. And yeah, people can go to pulsechaintour.com and get their tickets to come hang out with us. Axis goes. I mean, we have a blast on those cruises. And this one goes down to Mexico and stays in Mexico and Cabo for 2 days. So we're going to go stay down there for 2 days, party in Cabo for 2 days, and then get back on the boat and head back up to San Diego and hang out in San Diego for a day. But yeah, man, it's going to be a blast. It's going to be a blast. But yeah, thanks, man. It was a pleasure hanging out with you, and I'm glad that we finally got to stream once. Now I feel smarter, man. I feel smarter.
Good. I'm glad. Well, cool. Well, thank you so much, and we'll have to do this again soon.
Yep, we will. Everyone,
all right, dude. See ya. Take care.